Welcome to Investing Journey. In this episode, we're going to take a deep dive into VOO versus SPY, see the similarities and differences, and you can figure out which one you want to add to your portfolio. Stick around. So SPY and VOO are two of the largest S&P 500 index funds. They are very similar because both seek to track the S&P 500. The biggest difference is where VOO costs 0.03% fees, while SPY is 0.09%. Just as a review, an S&P 500 ETF is a fund that is made up of the 500 largest companies on the stock market. However, not every company is given equal weight in the fund, which is a percent of asset holdings. For example, the top 5 holdings in SPY and VOO are currently Microsoft, Apple, Amazon, Facebook, and Alphabet, which is Google, which happen to also be the largest companies in the US and the world by market capitalization. Together, these 5 companies out of 500 make up nearly 20% of the fund's total assets. The allocations between the top 5 holdings are fairly different but nearly identical between funds. Neither fund is excessively concentrated, with the top 10 holdings of each fund comprising about 28% of their total value. Holding weights are also effective identically between the funds. So SPY and VOO's diversified holdings reduce portfolio risk and volatility and are a significant benefit for the funds and their shareholders. One downside, though, is as the S&P 500 only includes 500 U.S. companies, both funds lack exposure to thousands of mid-cap and small-cap equities. Another downside is both funds invest in companies after they become large and successful, and so fail to profit from the rise to the top. All right, how about a long-term comparison? Since most of us would be buying these funds expecting them to appreciate over time and not day trading them. In a 5-year period, VOO beats SPY in almost every 5-year period. There are only a few 5-year periods in the historical data where SPY beats VOO, and even those were barely greater than 0% difference. The average relative percent change continues to shift more negative, meaning SPY is consistently underperforming or increasing less when compared to VOO. Seems like VOO gets slightly better over time. When we compare the statistics between 1 day, 1 year, and 5-year periods, the average percent change between SPY and VOO increases in order of magnitude as investment duration increases. The dataset between 2010 to the current date found that SPY increased 234.1%, while VOO increased 236.5%, resulting in a 2.4% difference over 10 years, VOO being the higher one. This may seem small, but every percent helps build your wealth. So what does this all mean? Which one is better? Which ETF should I buy? After looking at the data from different angles, there is very little difference between SPY and VOO in the short term. Day-to-day changes between the stocks are nearly identical. However, extending an investing period to 1 to 5 years amplify minor differences into more substantial ones. Even though the average 5-year percent change between SPY and VOO is only 0.72%, it can be a significant amount of money in practicality. An investment of $100,000 of SPY would be $100,720 in VOO. Over an entire lifetime or career, and depending on the initial investment, this can potentially be even more than an extra few $1,000s for retirement. Regardless, potential investors can feel at ease buying into either one due to the similarity. However, the lower fee of VOO, seemingly only small at 0.03 compared to the 0.09% of SPY, really adds up, especially in the long term. Also, SPY and VOO offer investors fantastic total returns, but relatively low yields and dividend growth. SPY yields 1.26% dividend, while VOO yields 1.30%, slightly more. VOO's slightly higher dividend yield is at least partially the result of the fund's lower expense ratio. Both funds are large enough that they are at zero risk of shutting down and liquid enough that spreads are effectively zero. Let's take a closer look at the top 5 holdings of each. SPY's on the left column, VOO on the right. As you can see, the difference of Microsoft is only 0.01%, difference of Apple is 0.01%, so there's slight variations and the rest are the same, Amazon, Facebook, and Alphabet, which is Google. Now we're taking a look at how the different sectors are broken down for each. SPY again is on the left column, VOO on the right. You have technology making up 34% roughly, consumer cyclicals making up 15%, financials 13%, healthcare 12%, industrials 9%, consumer non-cyclical, energy, utilities. As you can see, there's very, very slight differences. You can see in technology, SPY has 34.1%, while VOO has 34.2%. So there's very, very few that are different. Industrials has, again, 0.1% difference, SPY being 9.3%, while VOO has 9.4%. Very similar. So my overall take on this, even though I'm not a financial advisor and this is not financial advice, this is purely for entertainment purposes only, is that although they are very, very similar with small differences, over time, VOO seems to be the better option. Not only does it have a slightly higher dividend, but it also has performed slightly better, as well as the fee is significantly lower. That being said, I'll leave it up to you guys to decide which one is best for your particular portfolio. Please remember to like, subscribe, and share so that I can keep making contact. Thanks so much, guys.